Welcome back.
Welcome back.
Talking Cash, Season 2.
Yes, sir.
We continue.
Continued.
Last episode, told y'all how simple it can be for us as black folks to close the wealth gap. We gave you the proper steps that black folks need to take. You got everybody telling y'all you need to invest, you need to buy a house. We gave y'all some reasons why just doing that and that alone is not going to work.
Y'all are skipping steps 1 through 5 and going straight to NFTs, metaverse, option trading, forex trading. Why?
Got to do stuff in order. And what we said the order was before you start doing anything like that, get some life insurance. Please, get some life insurance. So today, we're going to make life insurance simple for you. We'll show you what the different types are, and we'll show you where those different types make sense for you. Coming up next on Talking Cash.
You getting ready to be a rich nigga.
Let's talk life insurance. I know it's boring. It's not sexy. It's also the quickest way for us to close a wealth gap. Because if we use it properly, it creates an immediate asset base, which is basically creates an immediate pool of money.
Think of it as a plan B. If other things don't happen in life, that life insurance will kick in.
Exactly. See, we got it all figured out. We do all the planning, we do the saving, we do the investing, we plan for the long term, and what happens when that 20 or 30-year plan gets cut short. Like, what does that investment plan produce when you don't have 20 years to fund it? That's where the life insurance comes in. Now, we told y'all in season 1, you can go back and check that out, that contrary to popular belief, black people actually do buy a lot of life insurance. But the problem is we buy the wrong kind of life insurance for our situation. And we also told y'all in season 1 that that was by design because we were targeted and sold mainly burial policies.
See that insurance policy that Big Mama been paying on for 60 years? When she going on to glory, gonna pay out by $7,000. So at the end of the day, they're gonna have your uncles in the backyard, listening to that old head busters and that 3-6 Mafia. Folks gonna be getting hit across the back with folding chairs like WWE, and you don't want that. So
Bye, y'all. Off the top rope. Yep. Got your youngest uncle out there in his feelings because he felt like he was a big mama baby.
So he deserved a deep freezer.
Yep. And now your oldest uncle done rock bottomed him. And he just rolling around in the dirt bleeding.
It ain't gonna look good. We got to go another route this time.
Look, y'all got grown ass family members out there, real live Royal Rumble, battling it out to see who gonna get that Cadillac Fleetwood with the bad transmission. It don't go nowhere. It can't go nowhere. It'll crank up, but it ain't gonna go nowhere.
You just want it.
But damn it, I'm leaving here with something.
Something.
Yep. And hey, I know why y'all really got mad.
Why, Joe?
They been eyeing Big Mama collection of wigs.
Oh, man.
Mm-hmm.
That purple one.
Mm-hmm.
That one she wore Easter Sunday.
I was just about to say that. My mama wanted me to have the Easter wig.
But see, at the end of the day, if everybody walked away from the situation with a little money, it wouldn't be so much hostility. Things could probably get done a little bit better.
Mm-hmm. Y'all over here rummaging through Granny house. Shame on y'all. So, what type of insurance do you get? The two big kinds you're going to always hear about, they're going to be talked about in the term and whole life, or term and permanent. Now, there's a lesser known category, it's universal life, which is still a permanent policy. So, basically, you got 3 kinds: term, whole life, universal life. But most people just sum it up as, do I want a term policy or do I want a permanent policy? And if you watch any TV shows where they're talking finance or you listen to Dave Ramsey, any radio show, everybody argues about what type do you buy. And black folks, we mainly lean towards permanent insurance. And that's going to fall mainly for us to whole life and universal life to a much lesser degree. But you hear Dave Ramsey always say, you hear Susie Orman always say it, you buy term, you invest the difference. But what does all that mean? Let's break it down for you, okay? So, cheapest type of insurance that you can get, term insurance. It's the cheapest, it's not even close. What is term insurance? Very simple. It is sold in usually 10, 20, or 30-year terms. At the end of that term, then the coverage expires and you could be possibly without coverage. Now, term insurance does not build any type of cash value. It is just purely a life insurance play. That's why it's so cheap. You're just paying simply the cost of insurance for a specified time. That's all you're going to have. No cash value, no dividends, nothing like that. Once that term is up, there's nothing there. You got to reapply for insurance. And where this can kind of hem you up is if you bought that insurance earlier in life and you hit your 60s or possibly your 70s and that term policy expires, it is going to be crazy expensive for you to get more term insurance. Now, whole life. This is the area black folks like to play in. When you hear whole life, all I want you to think is guarantees.
Guaranteed.
That's it. Guaranteed. Long as you pay the premium, you will have coverage. It is guaranteed that that coverage will stay in place for your
Whole
life as long as you pay the agreed upon premiums. Now, because the insurance company is insuring you for your whole life, the cost is higher. They have to factor in your mortality cost, which is the possibility they may have to pay out a death benefit. They have to factor that in not only for you in your younger age, but also for you in your older age. And one thing that's guaranteed about life,
it's going to end.
it's going to stop at some point. So they have to factor in the fact that if you continue to pay this premium, more than likely we got a 100% chance of paying out a death benefit. And these insurance folks are kind of smart. They're going to make their money. So the way this works is when you are younger, your premium payment is much higher than the actual cost of insurance. And that excess premium goes into an interest-bearing account that grows your cash value. Then that excess cash value is used to help offset the additional cost of insurance when you get older. Cash value on a whole life policy usually will grow at about 4 to 6%, and that cash value can also grow from dividends being paid from the insurance company. That dividend is based on the financial performance of the insurance company. So think of it as a return of profit from the insurance company. Now, what mainly draws us as a people to whole life is the idea that we can get cash value. It's just one problem.
What's the one problem, Jeff?
When Big Mama's death benefit ain't but damn $7,000, how much cash value can you possibly get?
Not much.
So
Not
here's
much.
the kicker. Your cash value can't exceed your death benefit. So if I got a low death benefit, inherently I'm going to have a low what? Low cash value.
That's crazy.
That's the game. So if I'm sold a smaller face value, a smaller death benefit policy, even though I'm thinking I'm going to gain cash value, it's basically impossible for me to do that because the cash value can't exceed the death benefit. So that's why I said we're being targeted for burial policies, which normally are going to be a $20,000 to at most maybe a $30,000 death benefit. And we'll do that thinking, oh, it's guaranteed. I'm going to have cash value. Man, you can pay on that thing forever. The cash value may end up with maybe $8,000 to $10,000. And Granny been paying on that since it was separate but equal water fountains. Yeah.
Colored only.
Color it. So the key to whole life or any permanent insurance is that if you can fund that policy properly, you can get to the point where there is enough cash value that that policy can sustain itself and you no longer have to make premium payments and you can take loans from the policy. Now, downside to whole life. Cost. Point blank, whole life can be considered dumb expensive, as the New York people would say. Wild expensive. So to give you an idea, if we take a 25-year-old, and let's just say they're going to get $250,000 of life insurance coverage. For a 20-year term policy, that premium is going to be $17 a month. For a whole life policy, it is $200 a month. That is a huge difference. That's basically about 10 times the cost. And as you play that out, same thing. At 35, same amount of coverage. $18 for a 35-year-old, $288 on a whole life policy. So as I said, just honestly cost prohibitive for a lot of people. So a lot of us end up getting whole life, but because getting the right amount of whole life can be too expensive, we just back off of that. Now, last kind, universal life. Lesser known permanent life insurance, but basically what it's trying to do is bridge the gap between term insurance and whole life. So whereas with whole life, everything is about guarantees, universal life is about flexibility. So you have a lower cost structure, still a little bit more expensive than term, but nowhere near as expensive as whole life. And what they'll do with the universal life policy, because it's flexible, they'll give you a minimum premium payment that you have to make in order to cover the bare cost of insurance. You can pay above that, but you cannot pay below. But normally they're going to tell you this is the absolute minimum, but this is what we're going to set your payment at. So that'll help you fund it early. And the idea is pay more than the cost of insurance. That way, later on in life, when your cost of insurance is greater, you have cash value there that helps offset it, so you don't have to pay that adjusted up premium. ULs and whole life, the difference is guarantees. Whole life, everything is locked down. Death benefits guaranteed. Premiums are guaranteed. The growth rate on the cash value is usually guaranteed. If you choose to take a loan from that policy, it's going to have a fixed rate. You know everything you're getting into. Universal life is all about flexibility. You can adjust the premium. You can adjust the death benefit. If you take a loan from the policy, you got different ways you can do that. It can be a fixed or a variable loan. And the rate that your cash value grows at, it can change as well. You have the potential for more upside, but then again, you also have the potential for fewer returns because it's not guaranteed. Now, did you know some basics about the types of insurance? The natural next question is?
Now my question is, which one do I get? Which one is a good fit for me?
Glad you asked, Brother Mojo. And the answer is, it depends on your situation.
Oh, okay.
See, the answer is different for each individual. The real answer is how much.
How much of that type of insurance do I get?
And the answer to that is enough.
Enough?
This is what I mean.
Enough is the answer.
Yes. So
you know what you need.
You need enough. Now, this is the reason why I said it varies for everybody. Because what might be enough for me may not be enough for you, or vice versa. Just depends on how we living, how many kids you may have. Are you married? Are you single? Do you own a house?
Those are some very important variables there.
Yeah. So just think about it this way. Okay, if I'm doing this right, and I want to buy the right amount, I want to buy enough, you at least want to cover your debts, right?
Right.
At least pay your bills off.
Right.
So if nothing else, at least start off by paying off the house.
Cool.
Okay. Now, if you're really doing it right, let's just say you're a family man, you got kids that depend on you, old lady, possibly side chick or two.
Yeah.
Now you want income replacement because your value to your house is what you bring in, and that's what people are depending on you for. So, lifestyle that the kids have and your wife, that's depending on the income of that household. You're not here anymore. Okay, great, we paid off the house, but now I don't have the income. So first thing you want to do is shoot for at least 10 years of income replacement. Let's give you an example. Let's say you're 40 years old. You got a house you owe $200,000 on. So at least now we already know you need how much? At least $200,000, right?
At least $200,000.
At least keep a roof over your folks' head. Let's say you make $50,000 a year. We take that to 10 years, that's $500,000.
Everyone should at least have that as far as the minimum.
Yes, and that I coach folks on that. At least 500, because that's going to usually cover the house and a little bit more. But in this situation, if we want to do it right, we want to cover the house for 200,000.
Okay.
And we want to have 10 years of income replacement.
That's a $500,000, ain't it?
700 to $1 million.
Oh, that's oil paint on the wall money then.
See, there you go. Now we talking.
Oh.
Mm-hmm. Now your folks, every time they talk about you, they start having an old English accent and talking like they're in the Bible. Who is that, Father? Oh, that is Mojo of the Hill. The first of his kind.
The first of the
original West Sider. So now that we got the idea of what kind of coverage you need, so at least pay the house off.
Right.
Put some income back. Now that we got that figured out, now you get to what type. And that boils down to how much can you afford. And here's where black folks are messing up. Because we love whole life, but we don't like the price, we'll end up with that damn $30,000 policy. When we needed at least how much minimum? At least 500.
500.
Because we playing from behind, y'all. So we got this is how you catch up. Needing 500,000 and arguing with somebody about what type of coverage you get and ending up with a $30,000 whole life policy does you no damn good.
Only thing you're gonna have happen is have your folks around here shooting dice for your garments like they did Jesus.
Jesus up there bleeding out.
Get off.
Tell nothing about it. trying to make it walk.
Trying to make it do something.
Look, won't be a damn power tool, a pistol.
Oh, that's gone.
A TV.
All that.
Won't be none of that left in the house.
Carpet rolled up, couches, cushions.
Plates gone.
Oh, silver first thing to go.
If it ain't nailed down,
it's gone.
Your Uncle Robert Earl getting it out of there.
Robert Earl. You see, you got to have two first names. You a very industrious individual if you got two first names.
Robert Earl taking all the... Ain't a big back TV left in the house. He getting all that.
Lou Willie.
Watch both of them.
Watch both of them. Robert Earl and Lou Willie.
He over there soon as grandma take off.
Oh Lord.
He just, man, that show live messed up. got them damn Fleetwood keys. He out there craning up trying to just wishing on a miracle. Boy, I tell you, let this son bitch get in reverse. I know something.
3 wheels though. Come on, man.
Yep.
Don't have your folks like that.
So here's the thing. When we start talking about, I got a mortgage to pay off, I have income to replace, you know what's a good fit for that?
What's a good fit, Jeff?
Term insurance.
Term, okay.
Perfect for income replacement. And as we just showed you, very affordable. We'll even post a graphic up on the screen for you so you can see for yourself.
With thine eyes.
With thine own eyes.
With thine own eyes.
So, as you are working and accumulating wealth in your 30s, 40s, and 50s before you hit retirement, term is your backup plan. So while you're doing all this saving and investing, this is the backup plan just in case you don't get to the end of your financial plan. Now, if you can afford a permanent policy, by all means, go ahead and do it. You can lock in those premiums early and start accumulating that cash value. But the problem is, most folks can't afford to pay 10 times more. So keep in mind that for most of us, from our 30s to our 60s, we raised and cheering and trying to pay off. And on the back end of life, you probably don't need as much coverage as you need while you're going through that phase of life. Or at least maybe you grew your assets to the point where when I get in my 60s and 70s, I got the investment account, I got the house paid off, so maybe I don't need the damn $1 million of life insurance. But if you want to guarantee that you have something to pass on, then you look at the permanent policy if you can afford it. But please just don't get caught up in the type of insurance. Just make sure you get how much?
What you need.
Damn right.
Get what
Get
you need.
enough.
Enough.
And in order to make sure that you have enough coverage and that you have something to leave for a legacy, you're probably going to need a little bit of both. You're going to need some term, you're going to need some permanent. The damn term insurance is going to take care of your major risks. That's your mortgage, your other debt, and your income replacement. And your permanent insurance, it'll make sure that you can get the damn oil paint on the wall.
That's what we're shooting for.
That's the goal, guys. Be a benefactor to your family. Make the whole family tree different from your point on. Make them refer to you and you want numbers after your name. So if I do this right, then it's gonna be like Jeffrey the Eighth somewhere down the road. It's gonna be like Old English. Even the damn girl's gonna be named Jeffrey.
That's what you want.
Mm-hmm. Like, oh damn, baby, what's your name? Jeffrey. What's your pronoun? What you identifying as? Oh no, that's my real name. It's just no, my dad. See he up. You see him up there on the wall. Oh, okay. Yeah, they're gonna be thinking you trying to pull the flim flam on.
Yeah, out here catfishing.
Calling herself Jeffrey. Well, she just told me her name was Third.
That's how that happens. That's how that happens. That's how that happens.
Just what they call you? Third. What you mean third? Well, I'm the third, but
just identify however you
see,
feel.
it's 4, 5, and 6 in the house too. So instead of calling everybody Jeffrey, Third, get your ass over here.
Third.
Yeah, that's it. Fifth, get your ass over here. Sam, where you at?
Sam.
Mm-hmm. So, hopefully this helped you kind of get the basics on life insurance. It gets a lot deeper than this, but we didn't want to bore you and waste all your time with it. So we just gave you some basics. You got term, whole life, universal life. Now, next episode, we show you some life insurance hacks. You don't like the fact that your term life can expire and you won't get anything? We show you how to get around that.
Show you how to maneuver.
Mm-hmm. The other thing we're going to show you is how to use your life insurance for more than just a death benefit. We're finna show you how to get over on the system. Check us on the next episode.
We out.